How can we take back fees from the insurance companies and put it back into the hands of the employees? For those of you who are business owners or manage your company's benefit plan, you may want to pay attention. Two of your biggest concerns probably are employee satisfaction and the overall cost of the plan. Unfortunately, there seems to be a dichotomy of challenges trying to satisfy these two competing interests. Employees want more and easier access to benefits, but this drives the cost of the plan up to the sponsoring company. Employers are trying to ensure they are creating something that is sustainable financially and still provides comprehensive benefits for employees. What to do? Obviously, this is almost an impossible win-win situation. There are elements that are consistent. The less money that goes to the insurance company, the more money that can go to the employees. So how can we look at taking some of the insurance fees and reallocating the funds towards employees? One way is to look at the funding model of the plan to ensure you manage risk, yet don't pay through the nose. Not only do insured plans cost significantly more in fees, but they have also something called an IBNR reserve that gets allocated into your first renewal. For companies with less than 50 employees, the fees are usually around 30+%, but the IBNR reserve represents another 8+%. That's almost 40% in fees. So what is an IBNR reserve really? Well, it's a fee of 8 to 10% that the insurance company tacks onto your health and dental claims over the year of the policy. First-year renewals are so costly because it has the entire IBNR fee hidden in the renewal rate. And if your claims grow every year, your IBNR reserve grows proportionately to your claims. So what happens to that extra IBNR money? The insurance company holds on to it, making money until you cancel your policy with them. Then they declare it as income. Yes, you forfeit your IBNR reserve when you leave the benefit company. So if you change benefit carriers, you need to build up a new IBNR reserve with the new benefit provider. I'm sure your benefit consultant explained this to you, right? You may be familiar with the term incurred claims. This is really your actual claims plus your IBNR reserve. This doesn't sound fair, does it? So what can you do to lower fees and get rid of the IBNR reserve? For one, insured plans have the highest fees. So only insure the benefit components that need insurance, like drugs, accidental dental, semi-private room coverage. Take the components that don't require insurance, like dental, paramedical, and vision care, and put them into either a health spending account or administrative services only model. In other words, only pay for what you use. Fees are much less, and there is no IBNR reserve factored into these expenses. Secondly, for the parts of your plan that you keep insured, work with a benefit provider that refunds the IBNR back to the client or eases the IBNR over 3 years instead of 1. Come talk to Performance-Based Benefits and see why solutions begin from a place of understanding.